Hi guys, welcome to another video for today, the 28th of July, 2026. So, I'm going to be looking at the stock now, POLA, Polar Power Incorporated. I have no idea what this does, nor am I interested. What I'm interested is in applying my technical analysis skills and applying my trading plan. I'm looking for a great trade and entry on this one, and execution, which we can do together. So let's get right into it. So this one pumped up in after hours quite well last night. Currently up around plus 40% from the peak to the low, and it's held up pretty well. It didn't get sold off, no offering, no pump and dump. This one held from 6:50 Eastern Time PM to what will be 9 a.m. Eastern, sorry, 4:30 a.m. Eastern Time for when pre-market opens. So this one, the first thing I see about it on the 5-minute time frame is a bull flag, which is obviously bullish, and you can do that by just identifying the pole and then the flag here, which is good. I never really use them. What I prefer is a falling wedge, and this one is a falling wedge on support, which is not what I like, to be honest. I like a falling wedge against resistance, which is a bit higher up, and then focus on the consolidation break up here. But we're going to be looking for entries, exits, and just seeing where this one's going to go for pre-market and market hours for today. So, as again, it's consolidating in a bullish pattern, which is good. I'm going to turn my indicators on so we get a better idea of what's actually happening. So we broke out over the resistance over 2, and it held and now has flipped 2 from resistance to support. So 2 is a good base for us to build upon and go up further. Let's look at the downside risk first. That's the first thing that comes to me if I want to look at this. And if you, obviously $2 is the support, we can go a bit beneath to try and stop loss raid and trick out a lot of people, as seen with this wick down here to 1.96, 1.95. But the main thing to me here is the Bollinger Band Center. So again, the Bollinger Band Center, if you watched our last video, it's a line in the sand of the chart, which means basically when we're above it, we're 65% more likely to remain above it. When we're beneath it, we're 65% more likely to remain beneath it. So if we do come back down to test it, there's a chance of 65% that we're going to bounce from it as a result. And we've not retested this yet, and it's something I think will get retested at some point. So make sure you add the Bollinger Band Center to your chart and keep an eye on this in the 5-minute time frame. So yeah, 1.9 is where it lies right now. So there's a chance we could come back down to 1.9 and still be in a bullish way, as a 65% chance that we're going to bounce from there anyway and bring ourselves back above 2. So taking that into account, if we were to come down lower and lose 1.88, I would then consider this one to be done and probably just come back down to where we came from, around 1.7. So beneath 1.88, looking at it in that sort of risk way, I would see this one being done. So if it goes beneath 1.88, I would not want to be in this at all. So that's the downside risk, so you can write that down and make a note, and we'll look at the upside risk now too. So again, I don't really like these setups on support. I like focusing on the resistance breaks. So maybe if we go to the 1 minute, I can show you an example. I can't really, to be honest, this is not really here, but typically I like to see a trade break resistance like this, and then I enter above the resistance when it flipped resistance into support, like around here. So with 2.5 from next resistance, I look to enter on 2.53, 2.54. That's the way I like to do it. I don't like to buy at the bottoms. This range right now is between, we are between here 2.5 and 2 in this sort of consolidation pattern. And if we don't break 2.5, we're still consolidating. If we don't break beneath 1.88, we're still consolidating. As sometimes it can trick you out if we do come beneath 2, as explained. So that's why you need to add the indicators to your chart. So I mean, looking at this further, for continuation towards 2.5, we need to break beyond the candle body high. So I'm going to put this in purple. And if we were to break over 2.18, I would expect continuation towards 2.45, 2.5 on this one. Me personally, I wouldn't look for an entry until we do break 2.5, as in that's my strategy, and that's what works 7, 8, 9 times out of 10 on a general basis. I don't really focus on these breaks here of the candle bodies, as it's less success rate. And me personally, I just like being right, and as a confirmation of breakout trader, I prefer a high success rate with a lower risk to reward in contrast to a low success rate with a high risk to reward. That's just my personality and what I prefer, and I've become good at it because I stick at it. I don't mix up many strategies, I just stick to one that works. So above 2.18, we can gap up towards 2.5, and yeah, the volume still in this looks good. I like how the 5-minute closed as well, and above 2.18, we gap up towards 2.5, which is around a plus 10-15% move. But once we break above 2.5, that's where I'll be looking for an entry, probably in market hours. Don't think this one will do it in pre-market, to be honest. It seems like a big task for it to do so. But if we do break beyond 2.5 at some point today, 28th of July, or even tomorrow, 29th, we should continue towards $3, which would be a major price target. And that would be around a plus 20% sort of move, I think. 15-20%. So I think the previous one, GOSS, is better, but this is still something worthwhile to look at. So let's go to the 4-hour time frame. So I've identified, above 2.5 would be a good entry, and beneath 1.88 would be a good exit for, making sure our losses remain smaller than what they need to be, which is obviously what we need. So this one, it should continue and go to 2.5 based off the 4-hour, but let's just go to the 1-hour first. So yeah, this one is definitely confirmed flip from resistance to support. So we broke it here with the green candle, as you can see, and then we came back down to retest it to make sure we're comfortable. It's like sometimes you just got to double check something to make sure you're comfortable, and this one did come and double check 2 as a support and tried to come beneath it as well, and then it got wicked up and bought beyond 2.1, and yeah, it's comfortable being above 2 now. So I think between 2 and 2.5 is a good consolidation range for this one, and again above 2.17, 2.18, which you can also see on the 1-hour in terms of where the candle body highs are, and where this purple line is, similar to what we looked on the 5-minute time frame. The patterns always continue to different time frames. Then when we break beyond this purple line, we continue towards 2.5. So let's go to the 4-hour. So yeah, a 4-hour candle close over 2 would see us continue towards 2.5 by end of today, end of tomorrow, 4 p.m. Eastern time. So by the 29th of July, 4 p.m. Eastern time, I would have expected us to hit 2.5, to be honest. And if we get the same sort of pattern, just a 4-hour green candle close over 2.5, we should continue towards 3, to be honest. Applying the same setup really on the 4-hour. So here we have the 4-hour candle close over the 200 EMA, 200 MA, these two thick white lines here, really strong moving averages, which can act as a resistance, and mainly the close above $2 as well. So as you can see, this is the shape. We closed above 2, and we should continue towards 2.5. So if we move it upwards and expect the same, not over 2 but over 2.5 this time, something like this, then we should continue towards the next level of 3, which I think could be a major target on this one, POLA. So a break beyond 2.5 would see us hit 3 on this, and between 2 and 2.5, don't get caught in the hype, don't get chopped around, don't lose, just identify its consolidation pattern, and it's going to go up, down, sideways, and frustrate you a lot until we break over 2.5. If we were to go beneath 1.95, 1.9, it's still okay. It's just another way for you to get manipulated, messed around, but if we do lose 1.88, then it's done. So not too much to say about this one apart from that really, and not really too much we can do apart from wait. And trading is like a cat being ready to pounce on the mouse, not a dog herding up sheep. So with that mindset, it's important to remain patient and wait for our criteria for entry. And there's going to be many setups as well today. I heard the Japanese and South Korean stock market crashed overnight, and Bitcoin has tanked as well. So there's volatility coming into the market, probably to do with the oil industry. So that means obviously oil-related stocks are expected to go up today. So I think today will bring a lot more volatility. I think Monday was a bit dry. So let's just be careful, be patient, and see what today brings. And remember, if you go to our GOSS video, you'll have something else to apply for today as well. And again, we're going to be looking at setups in all of our channels for options, day trades, swing trades, even commodities now. So check us out, link in the video description and the Twitter bio. So thanks guys, and catch you all later.